Hey everyone, welcome back to Corporate Decoder. Ever wonder how companies spin those quarterly reports to sound like everything's amazing even when it's not? Well, buckle up because today we're diving into Skkynet Cloud Systems' latest 10Q filing, their financial report for the last 3 months, and we're going to see if we can find the real story behind the numbers. Are they soaring through the clouds or just clouding the truth? Let's find out. This is a quarterly report, kind of like a checkup to see how the company is doing financially. They have to tell the Securities and Exchange Commission, which is like the financial police, how their business is performing. The reporting period ended in January. Skkynet Cloud Systems is a company that works with cloud-based systems. Basically, they help other businesses manage and share real-time information. This can be useful for things like controlling factories or tracking financial data. They were formed to improve older information systems by adding cloud technology. As of March 17, they had about 53 million shares of common stock out there. This tells us how much of the company is owned by public investors. There's also the preferred stock, which is another type of ownership that usually comes with some special rights. Now, before we get too deep, there's a section called forward-looking statements. This is where the company basically says, hey, we're going to make some predictions about the future. But things might not go as planned. It's a way for them to protect themselves if they don't meet expectations. It mentions things like obtaining capital, protecting technology and acquisitions, or buying other companies. Alright, let's get to the good stuff, the financials. The balance sheet is like a snapshot of what the company owns, called assets, and what it owes, called liabilities, at a specific point in time. This is as of January 31st. Cash and cash equivalents are at $1.3 million. This is the money they have on hand, which shows an increase compared to October. Accounts receivable, the money owed to them by customers, is at $513,179, also up from October. They have very little property and equipment, just around $1,000. Now, on the liability side, what they owe, accounts payable, what they owe to vendors is around $156,000, and accrued expenses is around $185,000, meaning money owed to related parties. Deferred revenue is what they've been paid for services or products they haven't delivered yet, is around $362,000. That's also increased. The accumulated deficit, which is basically the total losses over the company's life, is still a big number at $622 million most recent reporting period. Overall, total stockholders' equity, the value of the company owned by shareholders, is $1.1 million. The statements of operations, also known as an income statement, shows how profitable the company was over a period of time. Revenue came in at about $828,000. That's the money they brought in from sales. That's up significantly from the previous year. Operating expenses are all the cost of running the business: depreciation, salaries, advertising, and general expenses. Salaries and wages is around $226,000, and general administration at $260,000. All of this added up means the company is making income. They are also making some money, over $30,000 from currency exchange. This means that they are receiving more money after exchanging currency than before. Their net income is the profit after all expenses, was about $29,000 for this period. That is a substantial increase compared to the prior year where they only made $21,000. Earnings per share to common stockholders is practically nothing at $0, but it's still a profit, which is great. There are a lot of shares diluted into the stock price, around 61 million. The comprehensive income, which includes some other adjustments, is $230,000. The statement of cash flows tracks the movement of cash both into and out of the company. This shows the cash from normal business activities, investing, and financing. $157,000 cash coming from operating activities, stock-based compensation of $32,000, a number of non-cash expenses. All the money from business operations. Effective exchange rates on cash was about $4,000. Overall, the company has an increase of around $152,000. The company has no interest to pay or income taxes, and around $2,900 from dividends accrued, money owed on Series B preferred shares. The company is a Nevada corporation formed in 2011. The notes to the financial statements give more detail about the accounting methods used and other important information. The accounting rules and regulations are described. They are unaudited. There are always new accounting standards to keep in mind. In June 2016, the Financial Accounting Standards Board issued updates to reflect expected credit losses. Here are the details for how they recognized revenue. Sales of software is recognized upon delivery. Cloud service is recognized over time as the service is provided. The company has different percentages for product sales, support, and cloud. Europe is the highest revenue share. The revenue comes from a number of geographies. Europe made up the largest share of revenue, around 46%. North America was about 19%, and then Asia Pacific, the Middle East, Africa, and South America filled out the rest. There's a section on related party transactions, which is where the company does business with people who are closely connected to the company, like its executives. In March of 2012, Accession assigned all of its intellectual property, including the pending patent applications, to Real Innovations. Real Innovations required an on-time payment of $30,000. Messrs. Andrew and Paul will benefit. As of January, the amount due to related parties was about $85,000. Us as Andrew and Paul will benefit. As of January, the amount due to related parties was about $85,000. The company issues options, which are basically the right to buy stock at a certain price, to its officers, directors, and consultants. There's an estimate for the fair value around $53,000. As of January, the company has 8 million shares for options. The company sells its products to their end user customers both directly and through resellers. 7 resellers accounted for most of the sales. 1 end user customer was responsible for 14% of revenue, and 9 were responsible for approximately 51% of revenue. Finally, there's a section on subsequent events, which are events that happened after the end of the reporting period but before the financial statements were issued. The CEO and CFO have to sign off on the report, certifying that it's accurate and that the company has good internal controls. So what's my take on Skkynet Cloud Systems? Well, the financial picture isn't too bad. The revenue increased, there are no signs of the company slowing down, and with all of the cloud systems currently, the company isn't at risk of being irrelevant. The company is heading towards positive profitability. And however, their reliance on a few resellers and end users is a concern. If they lost any of their top clients, it could definitely impact the company. Overall, I'd say Skkynet is moving in the right direction, but they need to diversify their customer base and solidify their financial controls. Thanks for watching. If you found this deep dive into Skynet's financials helpful, don't forget to like, comment, and subscribe for more corporate decoder insights.